This is episode 76. Hey, Johnny, welcome back to another episode of your podcast, man. How is the week treating you?
It's Christmas time, isn't it awesome?
It is
Favorite time of the
awesome.
year.
You guys
Favorite.
got snow up there yet?
We had a few weeks ago we had a little bit. Yeah, we had like an inch or it covered the ground and grass and everything. So it was
Okay,
way early snow.
that's cool.
Back
That
in
is early
November.
snow.
Yeah,
Yeah, but that's
couple
kind of.
for
I remember
Thanksgiving.
growing up in Indiana as a kid, having snow at Thanksgiving all the way through like March. Back in the '70s, late '70s and '80s, and it was great. I
We don't
loved
get that much anymore, like where it's that long. So a couple, well, about a decade ago now, we had like 2 or 3 years where it snowed and it was so cold it stayed like I was working in an office. This is back about 12 years ago, and it got so much snow. We had this giant pile where they, plow the
it. Yeah,
driveway. And that
yeah.
pile, we all were kind of taking non-money bets, but just like, when is this going to melt? And that thing did not melt till like the end of April all the way. It was, because it was, must have been, higher than a basketball goal and so wide. But it
Yeah,
was cold for so long. It just never went away
it just
until
yeah.
it finally warmed up. But how was your Thanksgiving?
Oh man, it was great. Had my family come over. My little 1 year old granddaughter was here, and we just had fun and spent some time just relaxing and unplugging and really giving thanks for the blessings we've all been given in so many ways. It was great.
Thanksgiving's cool because it's not like there's no gifts or anything. It's just time together.
Yeah,
And
yep.
so the laughter, the chaos, if you got little ones and all that fun stuff is so fun. So
It
it's
is.
pretty cool.
It really is, and just to realize the blessings we all have, whether they're financial blessings or health blessings or just blessings of good relationships, is so abundant. We don't stop and give thanks enough. So it's one of my favorite holidays. So.
Yes, and it's a fun stretch here. We got a few weeks of just excitement, so it's pretty cool.
That's right. That's right. Well, other things that are pretty cool is what we're talking about today, dude. We keep talking about we're in this series of life insurance and different types of life insurance. Today, we're talking about a permanent life insurance policy and how you can use that to accumulate money inside of it. I always relate it to like equity in a house. And so you have this equity per se that you can actually draw out in retirement tax free, and it doesn't count against your Social Security benefits, right?
Right, it doesn't count towards any kind of income because it's a tax-free benefit. It's structured properly in it. So remember, back to the beginning of life insurance, it's one of the only couple because it's an insurance company couple vehicles that are able to be tax-free type benefits. So obviously there's different kind of life insurance. We've covered it, but if structured properly or utilized with a specific goal in mind, not just the death benefit,
Right.
man, you fund it properly, they can become a supplemental income stream during retirement that that can really provide a boost when you turn it on at certain times to hedge against inflation or provide you the extra income if you want to start doing certain charitable giving or maybe purchase something, whatever it may be, that you're going along there and boom, I can utilize this insurance policy for that. And there's a couple cool things you can do with it that are kind of waking up people's eyes to, wow, that does make sense. Because a lot of your wealthiest people utilize insurance
Yeah.
companies, life insurance. They think of Warren Buffett and all these guys and the Rockefellers and all that. All they ever had just money in stocks and bought a real estate and all this stuff. No, they utilized insurance products
Yes, they did.
big time because they knew the aspect of the guarantee approach to it, the legacy benefit of what it could do. And
Yep.
we try to teach people that it's not that you have to be super wealthy, but it can create generational wealth. It can provide income streams during retirement that are just amazing. So that way you're going along and all of a sudden you need money. Well, it doesn't count once again towards any kind of Social Security income, taxes, or anything like that that really provide, man, what a support it can do. And really, no matter what age, I mean, there's some things you can do if you've got, like we talked about, a lump sum of money sitting around. You're like, what do I do with it? This is going to go to kids or whatever it may be. There's, man, you could put some funds into there and it can still benefit you personally,
Yeah.
long term, as well as, like a legacy approach to your family.
Yeah, exactly. And you talked a lot about leveraging money and turning $1 into three and five. And life insurance is one way you can do that if you had a lump sum of money to put it in there and it immediately doubles or triples, and you can then pass along money. And that's one of the things about the Rockefellers and all those people is they maintain that generational wealth through a lot of things, but a lot of it was in life insurance, passing those when they passed away. All that money went to the next generation or their trust tax free. And then that next generation did the same thing. So they taught the legacy aspect of money to their kids and their grandkids, and they've passed wealth down. And normal people like me and you, we can do the same thing when we understand the vehicle that is out there.
Yeah, and so it's just another tool you can utilize for specific needs. Obviously, number one, if you're married, it'll go to your spouse to help replace lost income,
Right.
which is one of the goals of life insurance as far as the death aspect. But that living benefit of the income stream, man, that can just carry on while you're alive and really provide phenomenal benefit. And remember this on life insurance, one of the few features, whether it's a whole life type policy or we've talked about that, we've talked about index
Yep.
universal life and things like that. But what's cool about it is the concept you may have heard is like infinite banking, that concept, whether you
Yep.
necessarily know what that is or not. But the general idea is you can use your money twice,
Yeah.
which means that most of these insurance policies, I'm going to start drawing money out of it. If I do policy loans, borrow money from myself from my policy, and I'll use the easy number. Say there's $50,000 in there,
Mm-hmm.
and I'm going to take out $10,000. And in normal, any other account out there, if you have $50,000, you take out 10, your balance is now, Mike, do you know?
40, I think.
$40,000. And so if you have any other type of account, how much money are you getting interest on now?
40,000.
$40,000. Whereas life insurance, they have certain types of loans on certain type of policies where even though I've taken out $10,000, I still get interest credited on the 50.
Hmm.
Okay. So I
Yeah.
still get interest credit on my full account value because it's a loan. And yeah, there's interest on the loan, but so many times, depending on what type of policy, that interest rate can be
Yeah.
above the loan. So you're still making money
Right.
on your money while you're using your money. And so that's why you see structured properly these insurance
Yeah.
benefits, especially if you even started when they were younger. You're like, man, I'm taking $20,000 a year out of this because I built up so much value over the years. How
Right.
come this thing doesn't die out? Because you're still getting the interest on the higher amount.
Yep.
So it offsets that interest you may be charged on the loan, which makes them, man, do phenomenal things. Once again, if structured properly,
Right.
for like an income stream, which is just a great resource, and it's tax free
Yeah.
is the most important part. So remember, $20,000 of income from an insurance policy is equivalent to like 25 or $26,000 from a an account somewhere else, whether it's a retirement account, IRA, or something like that. And so it's worth more,
Yeah.
right? And
Yeah.
it also, once again, is you're still making money on the money you've taken out. There's no
Yeah.
other vehicle out there that can do something like that. And
It,
people just don't know it because they don't think about it or whatever it may be. But if you're out there, you got kids, grandkids. I mean, if you're in your 20s and 30s, it could be a supplement to what they want to start with um, retirement income if
yep.
structured properly and you stick to it just like you would a Roth IRA or
That's right.
401k or whatever.
Yeah, there's some major benefits to a properly structured permanent life insurance policy that most Americans just don't even get. Um, they think it's snake oil, and it's just not. It's just you're not educated because people don't talk about it very much. The wealthy understand it. The wealthy use it. Johnny can help you understand it because it can be part of a retirement plan. It's not the only thing you need to be doing, right? There's lots of things, but here's the thing: if you want to retire at new heights, you need to look at not just income, but taxes, Social Security, long-term care, inheritance. I mean, there are so many factors that Johnny and his team help you look at, talk about, discuss, and say what's best for our family, our situation. Sometimes a properly structured permanent life insurance policy is the right thing. Sometimes it's not, but you never know until you have that discussion. So,
And if you're real quick, if you're one of these people that, you're at the age where you're getting RMDs, but you're still in good health,
Yeah.
So maybe you're 73, you start getting these RMDs, you have a pretty good sized retirement account, an IRA. And so you're forced to take money out because you get to that age. So required minimum distribution. You're like, I don't need this money. Well, one channel you could put it into is you could fund a life insurance policy with it.
Yeah.
So if you're still in decent health, you're like, I really don't need this money. I'm going to throw it into a bank account for my wife, kids, grandkids. Put it to an insurance policy because once again, that if your RMD is $8,000 a year, well,
Mm,
$8,000 will fund some type of insurance policy that's going to make that $8,000 worth way more. You get
that's
one
right.
that has the dividends and the interest rate, and you'll see things happen on that policy over, the next 10, 15 years of your lifetime that will be, there's no other investment once you get the most bang for your buck for a
That's
legacy
right.
plan or like a long-term care type benefit than the life insurance. So you're not
Right.
throwing your money away. You're look at it as an investment into different parts of your goals, whether it's legacy, long-term care, income stream, whatever it may be. It's still a tool out there. So using RMDs is another thing to think about. If you're in decent health, you're in
Yeah.
your 70s, like, well,
What am I doing with this money?
I do
Yeah.
the money. There's other things you can do with it to help tax wise and stuff with RMD money, but this is one thing
Right.
that instead of just sticking it into an account, hoping it does something, um,
Right.
utilize the life insurance concept.
Absolutely. Yeah. And there's a lot more that needs to be discussed there. So reach out to Johnny, have a conversation, grab a copy of his best-selling book, and sit down because Johnny loves this. It's just part of helping each of his clients retire at new heights. So Johnny, man, thanks for a good discussion. We're still in this life insurance series. We're going to tackle a couple more angles in the weeks to come. So go have a great week as we prepare for Christmas.
Will do. Thank you, Mike.